This is the perfect group of setup pitchers to get into our next topic, as we have a bona fide debate going right now. We've got all the points in here. Let's now bring in Mandy Zhu, who's the chief equity derivative strategist over at Credit Suisse. And Mandy, I don't know if you've been listening to this kind of panel debate that we've been having right here, but it speaks to the overall narrative in the market right now, and maybe the reason why we've been range bound. Which way is this market supposed to go, given the cross currents in both corporate and macro data?
Yeah, no, it's great to be on the show, and you guys have definitely laid out a really great case, either both ways. And to me, the telling thing about today's price action is the fact that in an up day, all the cyclical sectors were lagging, right? And they've lagged for quite a while now. And to me, that really just signals investor pessimism on the economic outlook. So I think everyone is at this point very aware of all the negative news out there, right? The rise in cases, virus cases in parts of the U.S., potential reclosings, et cetera. But I think people are not paying enough attention to potential positives, right? Everyone talks about the Fed. That's, pretty well understood. What about fiscal stimulus, right? We have a big fiscal cliff coming up later this month. My view is that, we're going to get an extension to a lot of these stimulus measures for the second half of the year. And then, as we saw today, positive news about vaccines, right? So I think the pessimism is well understood. It's well reflected in the positioning. And then just to bring it back to the derivatives market, it's also reflected in the pricing in the derivatives market, where we've seen a lot of demand for downside hedges, downside puts. And in fact, that demand for that downside hedges is higher today than it was at the peak of the crisis in March. So to me, that's the asymmetry, or that is the dislocation that stands out, given the positive, I would say positive, policy backdrop. So to me, that's the opportunity, and our view actually going forward is actually quite constructive, given, there's still very cautious positioning in the market.
So Mandy, let me bring this up. And you mentioned this kind of this asymmetry that's happening with regard to pricing in the options market, more people flooding towards the downside insurance. That's something that traders call options skew, right? That the relative pricing of those puts relative to calls of similar type price movements. What exactly then does that tell you about what it looks like in the next, say, 3, 5, 6, 12 months? How does this play out in the marketplace? You say it's constructive, but is it an even path?
Not necessarily. It doesn't signal that it's going to be a straight line up, but it certainly suggests that the downside risk is well understood and well priced in. So, that means, really what is underpriced is the upside risk, right, to the market. And then in terms of, on the way up, what I think will lead is the cyclical sectors, because the rally so far has been really led by tech. It's been led by healthcare. It's been led by a lot of the defensive sectors. From here, if we're going to get further upside in equities, I do believe it will come from positive surprises to economic data. It will come from a more V-shaped recovery in terms of economic growth, and in which case, the cyclical sectors should benefit more. So the value names should benefit more in that backdrop. And in particular, given still, very high economic uncertainty, we really like playing that upside through options. So that's one thing that we've seen a lot of investors do. Most of the flow that we've seen have been hedges, but the bullish flow that we have seen have been concentrated in a lot of these cyclical sectors. For example, financials are playing for a catch-up trade there.
All right, so Mandy, before we let you go, is there any place in the market right now, any data point, any sector, industry, stock, anything like that, that serves as a possible canary in the coal mine for you about whether or not the direction is to the upside, if it's constructive down the line?
I think, to me, what to watch for is credit. And if we see a significant pickup in credit market volatility or credit spreads, I think that would be a big negative for equity. So I would say actually at the macro level, that is the indicator that I'm looking at most closely.
All right. Mandy Zhu over at Credit Suisse, thank you very much for joining us. Always great to get your thoughts here.
Thank you.
All right. Now, Karen, I saw you kind of nodding and kind of following along in that conversation. What exactly resonated with you there? I'm just watching kind of the reactions that you had during that interview.
Well, it's sort of interesting to me that you talked about the skew in terms of bearishness, that how much protection there is that investors have to protect the downside. For a lot of weeks we kept hearing, all right, we're going to retest the lows, and that was probably in April and May, and then, obviously we're significantly higher from there. that gives me comfort to hear that the market is sort of positioned for a downward move up, because then the path of least resistance, or the pain trade, as Tim calls it, is probably higher.